Yeah, it was on the front pages of plenty of papers this week about Melbourne and Sydney house prices going to record highs. But let's talk about the price points and who did best last year.
Yeah, look, it was interesting. There was a report released this year by the IMF looking at US house prices, and what they found was that in the US, very, very cheap properties did very well and very, very expensive properties did really well. We've had a look this week at what's been happening in Australia, and it's vaguely similar. I mean, one of the things that is very consistent with what's happened in the US is that house prices did rise during the pandemic. It was completely unexpected, certainly early on. There was a very strong disconnect between rental demand and buyer demand. Very weak rental demand, very weak rental levels, declines in many places, but prices continued to surge. What was different for Australia, though, is what we found is certainly very expensive price points nationally did incredibly well. But the cheapest properties didn't do as well as the next tier up. So that was quite interesting. I think there were a few things driving it. I think one of it was the fact that first home buyers did have very high levels of incentives and were able to upgrade to better properties, and so moved into that next price category. But then also problems in the rental market, that when we have a look at the places where rents really dropped, they were primarily areas where there were a lot of students, a lot of cheaper apartments, and so that really impacted values at that cheaper end.
Yeah, absolutely. And there's also some new data from Australia's financial regulator revealing quite a significant fall in loan deferrals. They peaked in May of last year during the country's nationwide lockdown, with almost 490,000 mortgages left unpaid, which was worth $192 billion.
Yeah, look, it's been quite incredible. I mean, early on in the pandemic, obviously there was a lot of panic around people's job security. There was a lot of people really worried. And at that time, banks did put automatic deferrals on loans. You know, they were running through them pretty quickly, offering them pretty easily. They were able to do that because they were in a pretty good position to be able to offer such support. What's happened now is what APRA's found is that we've seen a drop in home loan deferrals by 80% since that peak in May. When we look at small business loans, they've dropped by 90%. Those loan deferrals have dropped by 90%. So, you know, it is really good news. It does mean people are continuing to work through the challenges that they've had during COVID. It shows that people are getting back to work. We know that we're not completely out of the woods. There will continue to be a lot of problems for a lot of people, but, you know, luckily, or not luckily, but, you know, there has been a set of circumstances where conditions are really starting to return to normal.
And I wanted to ask your opinion on this as well. There was a story on the front page of the Border Mail saying that border residents withdrew $381 million in funds during COVID, saying it could pose issues for individuals and future taxpayers. Nerida, what are the ramifications for people who withdrew their super from funds?
Yeah, look, it is a challenge. I think one of the things that people see with super is that it is something they won't get for a very long time, and so as a result, they consider it, you know, not a bad deal to be able to reduce that superannuation contribution, those superannuation funds. So longer term, it does have issues, particularly once people hit retirement. And, you know, we know from all the calculators out there that the more you put in super when you're a young person, the more, you know, the better you'll be in retirement. So it is a problem. It was certainly something that was flagged a lot. You know, we did see a lot of the financial institutions outline that, you know, this is, you know, going to impact your retirement at some stage. Certainly the media was saying it as well. So, but, you know, we know that studies that were done last year, it just shows that, you know, people were quite content to pull money out of super, but they weren't going to sell their homes or draw down on deposits. So it's, you know, I guess it's an interesting discussion point around the future of superannuation.
Yeah, and let's get to iron ore. The industry has had a good year and also record wheat exports for Australia in 2020.
Yeah, look, it's interesting. I mean, iron ore has been the success story in 2020. You know, we've had record pricing, we've had record levels of exports, but grain exports have also hit a record level in 2020, and wheat in particular has been really strong. You know, very similar trends occurring with wheat as iron ore. It's a lot around global trade. Our biggest competitor for wheat is Russia, and they've had poor weather conditions. They've introduced a new tariff on wheat. They've also been hit very hard by COVID. So, quite similar to Brazil, which is our main competitor for iron ore, that they were hit very hard by COVID as well. So when we have a look at what's happened with wheat, it is particularly positive. It's probably not going to be quite as positive next year. The grain futures market is showing that Russia in particular is looking a lot more positive, and as a result, the futures market is starting to reflect that. Been a big deal for Australia, when we relate to this as to what's been happening in property markets. One of the regional areas of Australia that achieved the strongest price growth was the wheat belt of WA. So what we found there is that that area achieved a 10% price increase in 2020. The suburb or the town that achieved the strongest price growth was Meriden, which produces 40% of WA's wheat crop. So that was a very, that level of better economic activity certainly had a flow onto house prices.
Yeah, fascinating. Always great to see you, Nerida, and we'll talk to you again this time next week.
Speak to you then.